Well, here we go, another week in the stock market. Can the rally continue? That is the question everyone is talking about. So here are some key things that are going to happen this week for you to keep an eye on, and without doubt, these will be the things that decide if the rally continues going forward this week. Now, just to let you know, if you're on the Patreon, I did drop an exclusive video, which was the earnings review. I looked at some of the companies' reported earnings last week, mainly Microsoft, Visa, and Tesla, and did a video on Patreon. So if you do want to see that, join through the link in the description. You get 2 exclusive videos a week, as well as what I'm buying and selling in real time, and a Discord with 600 members on to talk to, including me. So let's get started on today's video. So S&P 500, another fantastic week last week, up 2.32%. Year to date, the S&P 500 is up 6.44%. That is an insane rally. We're talking getting towards now the yearly gains in the S&P 500, the average yearly gains in the S&P 500 in 1 month. I mean, even me that was bullish on the markets this year is looking at this going, at some point it needs to have a slowdown. We don't want to be jumping too quickly. And if we look at the Nasdaq, up 4.42% in the last week, and year to date up 12%. Now the crazy thing is that we are rallying fast, but the thing what you've got to really consider about is actually how low we will be to now. That is only a little short rally in these indexes. If you look at the Nasdaq, for example, from the lows really, it's only up 11%. It's still way off its all-time highs. If you look at the S&P 500, it's been a nice rally, but when you zoom out, you look at how beaten down that was. Same again, that's a 13% rally in the S&P 500. We're not near all-time highs yet, which shows you there is still room, or a fair bit of room, before we get to that point of view as well. But there were some stocks last week having mega weeks. Look at Tesla. This is a 557 billion market cap company. This isn't a small company. And it was rallying 30% last week. Obviously reported earnings and Wall Street liked their earnings, but that's an insane rally. And if you look at year to date, Tesla's up 64%. Shopify, absolutely amazing week last week as well, up 18%. Year to date, that's up 40%. And what you're seeing is, at some point this was always going to happen. When the risk on a little bit happens and you have the Nasdaq up, let's say year to date 12%, these individual stocks will rally more, and that's why you've seen Tesla up 64%, Shopify up 40%. And it doesn't take a genius to realise that if the markets do continue to rally up, you're going to see more and more of these individual stocks, these growth stocks, they are going to go up higher than the indexes. So there's no surprise there, and it's been a fantastic rally in the indexes, and that's definitely translated into some of these other stocks, individual stocks as well. Now getting on to the key things for this week. First of all, the Fed. The Fed are going to be meeting on Wednesday for their interest rate hike, and everyone at the moment is expecting a 0.25% interest rate hike. If the Fed do not decrease to 0.25 and stay at 50 basis points or 0.5 basis points, you watch the market. The market will not like that on Wednesday. So that's the key thing to be looking out for. In my opinion, they should go to 0.25. You look at inflation. Inflation has peaked. It is coming down. It's coming down rapidly as well. We've got the next inflation data on the 14th of February, and we haven't got a consensus out, but we could be talking very much near the 5% range by the time we get that. So you're looking, it's decreased from 9% into the 5% range. I don't see why the Fed are going to continue to, well, they shouldn't go at 0.5% interest rate hikes. I think 0.25% is 100% the thing to be doing, and that's the first point. They should do it, and I think that's what we should get. The second thing will be on the commentary. What are the Fed going to say? Now, everyone's hoping, or the market's hoping, the Fed kind of doesn't sound as aggressive. Jerome Powell has been cut inflation at all costs, and that's what he's always been saying through every single Fed meeting. The markets would like to hear a little bit of approach of the interest rates going to continue to come down and potentially see cuts very soon. That is what they want to see, some dovishness from Jerome Powell. Now, we'll see what happens. I think Jerome Powell will play the hard game once again and say, no, we're still committed to getting inflation down. And the markets won't like that on Wednesday. I think that's what will happen. But that's what people will be looking at. And the other key bit of data that we'll be getting on Friday is the January jobs report. Now, this is quite an interesting one, because if you watch the stock market and the Fed for the last couple of months, what everyone was seeing is the jobs being strong, the jobs report being strong, and you'd be like, oh, that's really good. But the market was dropping every time that jobs report will come in strong. The reason why is because people were wanting to put pressure on Jerome Powell to cut rates. So then, look, jobs are, everyone's losing their job now. You need to cut the rates. And every time jobs kept coming in strong, everyone's like, oh, the Fed are going to keep up the interest rates. And that's why we've always had the good job reports, and then the market's gone down on it. Now we're at an interesting point, because if the Fed come in with and decrease to 25 basis points, and the job market comes in strong, I think the market will actually probably react positively to that, to where, well, in the last few months, we've had negative responses to positive jobs report. I think if we get a positive jobs report and we've gone to a 0.25, and we're like, okay, the Fed, inflation's peaking, the Fed is starting to go a bit dovish, the jobs report was positive, this is good. But we've seen a lot of tech companies and other companies now really start to lay off the staff members. So we could see a weaker jobs report. So we might get everything that we want with the Fed, and then we'll get to Friday where we have weaker job numbers, and the feeling is that people are starting to lose jobs. Okay, the recession is here, it's getting worse. And that's the key thing that I said. The one thing that is really important is we need to see people still holding down the jobs. So that's probably another really important thing that we need to be staring at. And overall, that leads us to this week's earnings. We've got a few companies reporting earnings. I'm going to just zoom this out a little bit. We've got a few more companies reporting earnings this week. First of all, on the Monday, SoFi, I will be keeping a look at this. It's a growth stock that I've been really keeping an eye on. It's very high up on the watch list. This year, I really want to see them shrink the losses down. If they shrink the losses down and still grow very well, this is a stock that I've got on my watch list towards the back end of 2023, 2024. If it stays around this kind of share price, I would not mind picking this one up. So I'll be checking out these guys' earnings because it's high up on the watch list for a stock that I potentially could be looking at in 12 months' time. So that's one that I'll be keeping an eye on Monday. The other stocks on Monday, I'm not too bothered about. On the Tuesday, you got ExxonMobil, UPS. That'll be good for some economic data about the parcels and how well the economy is doing out there. You got Pfizer, Caterpillar, McDonald's. If you remember, at the start of the year, one of my predictions was for McDonald's to underperform the market. We'll see what happens. Spotify, AMD. AMD is an interesting one. I took a look into AMD a couple of weeks ago because I was looking at potentially investing into a company. I did invest. I've not actually talked about it on the YouTube channel yet, but you guys on the Patreon know which stock this is. I actually recently invested into a company that's similar in this kind of area, and I was comparing it to some other stocks and opportunities, and I had a quick look at AMD. And AMD is 45 times earnings. But the issue is that last year the growth looked really good on AMD. They made an acquisition and it was making the growth look, 29% year over year. Like, oh yeah, they're still putting in good growth. Now because the acquisition is out of the numbers, AMD at the moment, analysts are expecting them to grow 6%. Now it would be key to see their outlook and what they kind of give us. But I look at that, and if AMD do fall in line with analyst expectations and they grow at 6% year over year, I don't know why this is at 45 times earnings. I think we could see AMD drop a little bit lower. And I won't complain about that because I think in the long term they'll still be okay. I think the semiconductor space, I think AMD is a fantastic company. I just think if we have the opportunity to buy this one a little bit cheaper, and it's getting a bit valued more off the short term rather than longer term, it could be an opportunity. So that's one that I'm looking at. I think it's a little bit overvalued and I want it to drop, and it could create a good opportunity for me in the longer term. So I'll be keeping an eye on that one. Snapchat reports. Obviously this is, I think, the most volatile stock in earnings. So it's going to move. It's going to move at least double digits. The thing with Snapchat, that, as we always say, that's key to be looking at, Snapchat will move Meta, Facebook, and it will also move Pinterest. And even though I don't own Snapchat, and it shouldn't really move Meta and Pinterest as much as it does, but it will move them. So I'll be keeping an eye on that one just because of them two. We've got a couple of more stocks that are reporting. EA, for example, Match Group. Wednesday, Waste Management, Altria, T-Mobile, Peloton. Wow, they've had a really tough 24 months, haven't they? Then we've got Meta on the close. That's probably the biggest one on the week up to this point. So we'll see how that's going there. See what they're saying about potential revenue, profit, what's that metaverse spend going to be. Analysts will be looking very much forward to seeing what they say about spend and profitability. That will be what everyone's looking at for Meta. And you've got a line that's reporting earnings. Not too much else on the Wednesday. Thursday is the big day. So there's a couple of companies reporting in the morning, but the after the close is a crazy one. So first of all, Amazon. Amazon is actually one that I'm starting to look at a little bit more. Depending on what Amazon give on their guidance, and I think everyone's in the same boat, which I'm worried about, because if they are doing what I'm doing, then if it's good, then the share price might jump. I'm waiting to see what outlook they give. I'm seeing what revenue growth they're going to say they're going to be growing at. The reason why is because if Amazon's now getting valued to like a 4, 5, 6% revenue growth company, it's a bit like, I don't know if it's that good of an opportunity. If Amazon say, oh yeah, we're going to continue growing at like double-digit revenue, Amazon then comes a little bit more interesting to me. So I'm kind of interested to see what they say there. So we'll see what happens. We've got Apple, obviously another stock that I said will underperform the market this year. We'll see how they're doing. We'll see if iPhone sales are slowing down. Alphabet, obviously a stock that I own. It's a company that I'm trying to make my largest position in my portfolio. Last time their earnings came out, I thought they were okay. Market did not like them though, and sold the shares off. So ideally, if Google can come out with a decent-ish earnings report, a 7, 8 out of 10, and we get a 5% drop in the share price, that'll be ideal, and hopefully I can nibble some shares on Thursday. So that's what I'm looking for. We've got Ford, Qualcomm, Starbucks. I love Starbucks. It's a company that I've been desperate to own in my portfolio, and potentially I could have done, because I think it dropped into like the $70 range, and maybe I should have bought the stock then last year, but I didn't. And I've actually had 2 opportunities where I look back and I go, I should have bought it then, and I haven't. It's a stock I'd love to have in the portfolio, but yeah, just a little bit high in the valuation now, but we'll see what happens with Starbucks earnings. And then we've got a couple of companies reporting on the Friday, which I'm not too fussed about anyway. So that's all the key things that you've got to look out for on this week. Obviously, you got the job data, the Fed. Those are going to be 2 key numbers on the Friday and the Wednesday. And then also you got all these companies' earnings, because without doubt, the likes of Meta probably move the market. Amazon, Thursday's going to be moved by these companies' earnings for sure. And then potentially you might get a little bit of moving of the market of AMD. And believe it or not, Snapchat, because of all the companies it can affect, the likes of Google, Meta, Pinterest, for example, because it actually gives you a good insight on advertising spend. Believe it or not, Snapchat actually has the ability to move the stock market as well. So we'll see what they come up with when these guys report this week anyway. So hope you enjoyed a little video this week previewing what to be looking out for. As always, have a good week. I'll see you on tomorrow's video. If you could hit that like button if you're new around here, subscribe, and I'll see you in a bit.